Okay, so thinking about getting into the stock market, huh? Yeah, a lot of people are, and it's a smart move. Over time, you can really make a difference. But gotta admit, it can be kind of overwhelming when you're first starting out.
It really can. There's so much information out there.
Exactly right. So that's why we're doing this deep dive today. We've got this guy that's got a ton of great information on investing in stocks. It's perfect for beginners.
Yeah, we want to make it, easy to understand,
Right. Break it down.
help people get started the right way.
Exactly. And we're going to kind of distill it down,
Yeah,
cut through the noise and give you the most important stuff.
absolutely.
So let's start with the basics. What are stocks anyway? Like, I know they're like, ownership in a company. How does that actually work?
Well, you can think of it like buying a little piece of business. So let's say, there's that coffee shop you love. They've got the best coffee in town. You think they're, going to be the next big thing.
Oh, yeah, like I get it.
When you buy stock in that company, you're basically becoming a part owner.
Oh,
So
right.
you're sharing in their success.
Interesting. Okay, that makes sense. So besides, potentially like making money, why do people invest in stocks?
Well, one of the big reasons is growth. Historically, the stock market has given like better returns than other investments like bonds or savings accounts. So it's helped a lot of people build wealth.
Okay, yeah, that makes sense.
Yeah.
But the stock market is like risky.
Right. There is always some risk, yeah.
Like I've heard stories about people like losing money. So it makes me, a little hesitant.
Well, it's true. It can be volatile. The prices can like go up and down a lot in the short term.
Right.
But the key is to think long term. Over time, the market usually goes up.
Oh, okay. So I shouldn't, you know, freak out if things go down a little bit.
Exactly.
Just kind of ride it out.
That's right. Focus on the big picture.
Okay, that makes sense. But what if, like, you see a company um, making decisions that you don't agree with?
Oh, interesting point.
Like, do you just stick with it no matter what?
Well, that's where, doing your research and using your own judgment comes in. Diversification is important too, and we'll talk about that more later.
Oh, okay. I've heard of that.
But even within your portfolio, you want to feel good about, the companies that you're invested in. So if you lose faith in a particular company, you can always sell your shares and invest in something else.
Okay, so you're not, like, stuck.
Right.
Once you buy a stock, you
You
can
have options.
sell it.
Yeah, you can always adjust.
Okay, that's good to know. So how do you even, like, know which companies to invest in?
Yeah, it's a good question.
I mean, there are thousands of stocks out there.
That's right. So it's about finding companies that are, doing well financially, have good growth potential, and, have something that sets them apart from their competition.
Okay, so you have to do, like, a lot of research.
Well, it does involve research.
Sounds like a lot.
There are some shortcuts, though, for beginners who, maybe don't have a ton of time to spend on, reading financial statements and all that.
Oh, okay, good. Like, what kind of shortcuts?
Well, a quick tip would be to start with what you already know. So think about the products and services that you use every day.
Oh, okay.
Are there any companies that you really like admire or believe in?
Yeah, okay, that's a good point.
That's a good starting point.
Start with what you know, then do your research.
Exactly.
Okay, so before we, like, dive into specific companies, let's talk about the different types of stocks.
Okay. Sounds good.
Because I know there are common stocks and preferred stocks.
Right. And there are some key differences between them.
Yeah, what's the difference?
So common stock gives you voting rights in the company. So
That's really
you have
cool.
say in those like big decisions. Preferred stock doesn't usually come with voting rights,
All right.
but it has priority when it comes to dividends, which are payments that companies give to their shareholders.
Oh, so preferred stock is kind of like getting VIP access to, like, the company's profits.
Yeah, you could think of it that way.
Okay, interesting. So different types of stocks, they have different, benefits and risks, I guess.
Exactly.
But how do you actually, like, buy these stocks? You just go to a store.
You can't just go to a store and buy a stock certificate anymore.
Okay.
You need what's called a brokerage account.
Oh, yeah.
That's like your gateway to the stock market.
Right.
So you can buy and sell stocks, manage your investments,
Okay, okay.
that kind of thing.
So a brokerage account is, like, essential then.
Yeah, you pretty much need one to get started.
Okay. Are there, like, different types of brokerage accounts?
There are, actually. You've got your traditional brokers, so like the big names like, Charles Schwab or Fidelity,
Oh, yeah.
and they offer like a full range of services, so financial advice, research, that kind of thing. And then you've got your online brokers like Robinhood or E-Trade.
Oh, yeah. Okay, so I've heard of those.
And they tend to be like more
Oh,
do-it-yourself,
okay.
and
Yeah.
they often come with lower fees.
So traditional brokers, it's kind of like having a personal chef,
I like that analogy.
right? Like they take care of everything. And then online brokers, it's like ordering takeout.
Yeah, that's a great way to put it. It really depends on like what you're comfortable with.
Okay, yeah, that makes sense. So I need to get myself a brokerage account.
First step.
Got it. But before I start picking stocks, what are some of the things I should be thinking about?
Well, the first thing is to figure out your goals, right?
Oh, okay.
What are you hoping to achieve with these investments? Are you saving for retirement, maybe a down payment on a house, or something else?
Right. Yeah. Okay. So that's important. And how much risk I'm willing to take on.
That's right. Risk tolerance is like a big deal.
Yeah.
So, how comfortable are you with, the market going up and down?
Yeah.
Can you handle a little bit of volatility, or do you prefer, a more conservative approach?
Okay. So goals, risk tolerance.
Got it.
Okay. Got it. So once I figure all that out, then I can just start picking stocks.
Well, not so fast. There's another really important concept that we need to talk about, and that's diversification.
Oh, right. We touched on that earlier. Is not putting all your pizza toppings on just one slice.
I like that. Yeah,
Yeah.
exactly. Spreading out your investments across different companies, different industries.
Okay. Yeah. So you're not putting all your eggs in one basket.
Exactly.
Right. Makes sense. So before we dive into diversification, let's take a quick break. We'll come back and explore some specific strategies that are, good for beginners.
Sounds good. I'm ready for a break.
Okay, so we've talked about, the basics of stocks, different types of brokerage accounts, and the importance of setting our investment goals and figuring out our risk tolerance. Now, let's get into some specific strategies that can help us navigate the stock market, especially when we're just getting started.
Yeah, there are some really solid strategies out there that are, particularly good for beginners and can help minimize risk and maximize those potential returns.
Okay, cool. So what's the first strategy on our list?
Well, let's start with dollar cost averaging, which is often called DCA. It's a simple but powerful strategy that can, take the emotion out of investing.
Okay, I've heard of DCA before, but I'm still a little bit fuzzy on how it works.
Oh.
Can you break it down for me?
Sure. So let's say you want to invest $1,000 in a specific stock. Instead of investing the whole amount all at once, you could divide that $1,000 into, smaller chunks
Okay.
and invest those chunks at regular intervals. So maybe $100 every month for 10 months.
So instead of trying to time the market perfectly and, maybe buying high, you're spreading it out over time.
Exactly. And that way you're kind of averaging out your purchase price over time.
Oh, okay. So you're buying more shares when the prices are lower
Right.
and fewer shares when the prices are higher.
Exactly. So it helps reduce your risk.
That makes a lot of sense. DCA sounds like a really, smart way to approach investing,
Right.
especially for someone like me who's just starting out and, maybe prone to making emotional decisions.
Yeah, that's one of the big benefits of DCA, that takes the emotion out of it. And you're consistently investing over time, regardless of, what the market's doing.
Right, right. But doesn't that mean you might miss out on, buying more shares when the prices are really low and maybe sacrificing some gains?
Well, that's a good point. But trying to time the market perfectly is really difficult, even for, experienced investors.
Okay, yeah, that's true. So it's kind of a trade-off.
Yeah, you're not always going to get the, absolute lowest price, but you're balancing that out by not, risking buying at the very top.
Okay, I see the trade-offs there. So DCA seems like a solid strategy, especially for beginners. I like the consistency of it and, avoiding those emotional investing traps.
Exactly.
Exactly. So DCA, check. What other strategies should we have on our radar?
Another classic strategy, especially for long-term growth, is buy and hold.
I like the sound of that. Simple, straightforward.
Yeah.
But what does it actually look like in practice?
Well, basically, you buy stocks or ETFs that you believe in, and you just hold on to them for a long time. I mean, we're talking years or even decades.
Wow, okay. So instead of getting caught up in the day-to-day, ups and downs of the market, you're just, you're in it for the long haul.
Yeah, that's the idea. You're trusting that over time, the companies you've invested in will grow in value.
Okay, I get it. But what if you see a company making, some not so great decisions?
Yeah.
Do you just hold on no matter what?
Well, not necessarily. Buy and hold doesn't mean you just, blindly hold on to every stock forever. You still need to, keep an eye on your investments and make adjustments as needed.
Oh, okay, so it's not completely hands-off.
No, you're still engaged, but you're not like, reacting to every little blip in the market.
Right, okay. But how do you decide when it's time to sell?
Well, that's a complex decision, and it depends on a lot of factors, like the company's performance, the overall market conditions, your own investment goals. But sometimes, it might make sense to, sell some of your shares or even all of them if you don't believe in the company anymore.
Okay, so it's about, being patient and having a long-term vision, but also staying informed.
Right. You got to keep learning and, be ready to make adjustments as you go.
Okay, great advice. So buy and hold, another good one. Any other strategies we should consider?
Absolutely. Let's talk about dividend reinvestment, which can really, supercharge your growth over time.
Oh, okay. So it's like getting free pizza toppings,
Yeah.
and those toppings keep growing more toppings.
Yeah, that's a fun way to think about it. So many companies pay dividends to their shareholders, which is basically a portion of their profits.
Yeah.
And with dividend reinvestment, instead of getting that dividend as cash, you automatically reinvest it to buy more shares of that same company.
Oh, okay. So
Wow.
it's like those dividends are creating more dividends.
Exactly. It's the power of compounding.
So it's like a snowball effect.
Yeah, you could say that. By reinvesting those dividends, you're buying more shares, which then generate more dividends, and it just kind of keeps building on itself.
Wow, I can see how that could really add up over time.
Mm.
But are there any downsides to dividend reinvestment? Like, should I always reinvest, or are there times when, maybe taking the cash might be a better option?
Well, dividend reinvestment is a great tool, but it might not be the best approach for everyone in every situation. Like if you need the cash, for living expenses or something, then taking the cash might be better. Or if you're in a high tax bracket, there might be more tax efficient ways to invest those dividends.
Okay, so it's about, looking at my individual situation and goals.
Right, exactly.
Got it. But overall, it sounds like dividend reinvestment can be a really good way to boost those returns, especially for like long-term investors.
Absolutely. It's a simple but really effective way to take advantage of that compounding effect.
Okay, so we've got dollar cost averaging for consistent investing, buy and hold for long-term growth, and dividend reinvestment for that extra boost. Are there any other like important concepts or strategies that we should keep in mind?
Yeah, there are a few other things. It's important to understand some of those basic investing terms,
Okay, like what?
like things like PE ratios or market capitalization. We don't have to get into all those today. But, familiarize yourself with them over time.
Okay, so got to learn the language of the stock market.
Exactly.
Okay.
And another important thing is managing risk. We talked about diversification, but it's really important not to put all your eggs in one basket. Spread your investments around
Diversify, yeah.
different companies, different industries, even different types of assets.
Okay, so like, don't just invest in stocks. Maybe consider bonds or real estate as well.
Right, exactly. It helps protect you from, the ups and downs of the market.
Makes sense. But even with diversification, there's still a chance of losing money in the stock market, right?
Well, yeah, investing always has some level of risk,
Right.
There's no guarantee that you're going to make money. And yeah, it's possible to lose some or even all of your investment.
Okay, so that's a reality check. What are some of the biggest risks that, we should be aware of? And how can we, like, try to minimize them?
Well, one of the biggest risks, especially for new investors, is, letting your emotions get the best of you. It's easy to get caught up in like the hype or panic when the market's moving around a lot, but that can lead to some bad decisions.
Right, like selling low and buying high.
Exactly. So it's really important to have a plan and, stick to it even when things get a little crazy.
Okay, stay disciplined.
Stay disciplined.
What other risks are there?
Well, another risk is like not being diversified enough.
Oh, right, right.
If you put all your money into one stock or one industry and it doesn't do well, then, you could lose a lot.
Right. Spread the risk. Yeah.
Okay.
But even with a diversified portfolio, things could still happen, right? Like the market could just, tank.
Well, yeah, that's true. There are some things that are just out of our control, like, a recession or some big global event could happen.
Okay, so those are just risks that come with the territory.
Right. But we can take steps to minimize those risks by diversifying, doing our research, making informed decisions.
Okay, so acknowledging the risks, but taking steps to manage them.
Exactly. It's about finding that balance between risk and reward.
This has been really insightful. We've covered a lot of ground today. I'm feeling a lot more confident about navigating the stock market now. But before we wrap up, are there any other resources or like tips you would recommend, especially for someone just starting out?
Absolutely. There's a ton of great information out there that can help you learn and become a better investor.
Okay, great. I'm ready to learn more. Where should we start? So yeah, we've covered a ton in this deep dive. Everything from the basics of stocks to all those different investment strategies and the risks too.
It's a lot to take in, but I think we've really given our listeners a great foundation. Anyone who's looking to get into the stock market.
Right, exactly. But I think what's really important is like what to do with all this information.
Absolutely. Like, it's one thing to, understand it all, but it's another to actually, use it.
Okay, so let's switch gears a bit. Go from the theory to like the practical stuff.
hmm
What are some actual steps our listeners can take right now to get started?
Well, the first step is, pretty obvious, I guess. Open a brokerage account.
Right, of course.
We talked about, different types of brokers earlier. So do your research, figure out which one is, the best fit for you.
Right. And once you've got that account set up, you got to fund it.
Yeah, put some money in there so you can actually start investing.
Okay, brokerage account funded, check. Now comes the exciting part, choosing what to invest in.
This is where it gets fun.
Yeah, it's like, all those pizza toppings we talked
Yeah,
about.
right.
Now you get to pick your favorites.
Exactly. So think back to those investment goals and your risk tolerance.
Oh, right, right. That's important.
Are you in it for the long haul, or are you, maybe saving for something specific?
Yeah, yeah. And, how much risk am I comfortable with?
Right. So if you're a more conservative investor, maybe you want to look at, well-established companies, ones that have a good track record of paying dividends.
Oh, okay. And if I'm, more comfortable with risk and I'm, looking for potentially bigger returns.
Then maybe you want to explore some, newer companies and industries that are you know, really innovative.
Okay. Yeah, that makes sense. But there are thousands of stocks out there. How do I even, start to narrow it down?
Well, one approach is to, think about the companies you already know,
Oh, right, right. Start with what you know.
like the ones whose products or services you really like. Or maybe there's some industries that you're, particularly interested in.
Yeah, that makes sense. It's easier to, research and invest in companies that you kind of already have a connection with.
Exactly. And don't be afraid to, branch out a little too. You might discover some hidden gems that way.
Okay, I like that. But even researching individual companies can be a little bit, daunting. Are there any like shortcuts for beginners?
Well, we talked about ETFs earlier.
Oh, right, right. The exchange traded funds.
Yeah, and those are a great option for beginners. They give you that instant diversification without having to pick individual stocks.
Okay, yeah. It's like getting a pre-made pizza,
Exactly.
All the toppings are already there for you.
They've done the work for you.
Okay, ETFs, good to know.
Yeah.
But before I, run off and start buying stocks, what are some final words of wisdom you'd offer our listeners who are, just getting started?
I think the most important thing is just to, start.
Yeah, yeah.
Don't let fear or, being unsure hold you back. Even if you're only investing a small amount, you're taking a step in the right direction.
I love that. And remember, investing, it's not like a, one-time thing. It's a journey.
It really is.
It's a process of, learning and growing and adapting to the market as it changes.
Exactly. Just be patient, be curious, and, don't be afraid to make a few mistakes along the way.
Right. That's how we learn.
That's how we learn, for sure.
This has been awesome. We've covered so much ground today, from understanding stocks to exploring all those different strategies.
And those resources, too. All those great resources that are out there.
Exactly. So, to everyone listening, remember, you don't have to be a, Wall Street whiz to get started.
Yeah, anyone can do it.
Take that first step, stay informed, and, enjoy the ride.
Yeah, happy investing, everyone.